One tool that many successful landlords are using at this moment in time is bridging finance. When used correctly, bridging finance helps you with the speed, the flexibility for those investment purchases. In this video, we're going to break down how effective it can be when used in various areas across residential, land and commercial purchases. So, first things first, what exactly is bridging finance? Bridging finance is a very effective tool. Think of it as a short-term loan secured against residential, commercial property or land with planning. It is traditionally used in scenarios where there is a tight deadline to meet. It could also be used in instances where there is adverse credit, so your more traditional lenders, high street lenders, won't look at the borrower's profile. It could also be used to purchase a commercial element where there's not enough trading accounts to get a commercial mortgage, therefore you could get the short-term bridge, acquire the site and then refinance further down the line. When we first started out many years ago, bridging was sort of going hand in hand with auction purchases where you needed to move fast, to typically 28-day turnaround. In that instance, there's no chance you're going to get a traditional mortgage, therefore the bridging lender would step in, give you terms within days, then be able to instruct evaluation if necessary and comfortably complete within the 28-day time frame. Now, one of the more regular ones you see is probably a light refurb or heavy refurb bridge. This is where there may be an initial day one loan, I would say circa 70% to acquire the property. The lender will then give you further funds to enhance that property before you refinance onto a longer term mortgage. Bridging always has been and always will be a very specialist tool, a very useful tool for landlords looking to make quick purchases. We feel it's a buyer's market now. Landlords are going to be able to come in with credit-backed terms from a bridging lender, could possibly negotiate themselves a better purchase price, therefore getting themselves a better deal, even when factoring in the cost of funds and all the other costs attributed with bridging finance. Now that we've covered the basics, you're probably wondering when landlords traditionally use bridging finance. From our recent sort of case studies or the recent deals that have been done, a lot of it has been on the element of they want to make a purchase, but they also want to enhance that property. They might be converting it into a HMO, they might be doing extensions. But with that basis, it's typically a day one figure from us, and then we support the works, maybe in arrears, depending how much work is being done. But certainly, different lenders call it different things, but it may be a bridge refurb product, it may be a light refurb, maybe heavy refurb. But this is one of the main areas that bridging loans seem to be used at the moment. One I'm not doing as much business in as I used to, but still a strong favourite of mine is auction purchases, whether that's residential or commercial. It's pretty much a well-known fact that bridging finance is the fundamental way to commit to these tight deadlines. A lot of them are 28 days. We work in partnership with a few auction houses who refer us to the borrower if they are not fully purchasing in cash. Terms are issued quickly, deals are completed quickly. That's always been a staple of the bridging loan use. Other methods or other reasons you could use bridging loans are possibly if there's adverse credit. Bridging lenders are a lot more flexible in that scenario. High street lenders do not want to see any type of adverse credit. Bridging lenders are a lot more open to discussions as to what that was for, when it was for. We understand, especially in the modern world, things happen. Therefore, we try and be flexible in that scenario, and a lot of the time, that is why you are paying a bit of an increased rate, but of course, bridging loans are taking more of the risk, and bridging lenders can also operate a lot faster. So they're probably the main reasons that I'm seeing, and the main reasons that landlords are using bridging loans. A flip side of that is possibly one of my most trusted customers who's now a good friend. He has a very strong portfolio. You could argue he doesn't need bridging finance. He has a lot of cash around, but he'd rather use our money. Granted, it might cost him, say, 20,000, 30,000 in fees and interest over the period of time, but he keeps his own hard cash around him. So if that next lucrative opportunity comes and he needs to move quickly, he can use his own cash, be a cash buyer, be at the front of the queue and really make the most of that opportunity. So if used correctly, as I always say, if used sensibly, if there's a clear plan, if there's a clear exit, bridging loans are a fantastic tool in any landlord's arsenal if they're looking to attack the property market. Understanding when to use bridging loans is one thing. but understanding the benefits is possibly even more crucial when assessing your overall plan in property finance. Bridging loans provide numerous benefits to landlords, which is counteracted by the fact people would possibly say, well, it is more expensive, and with the commercial mortgage might be 6-7%, and bridging loans more like 10-11%. But with that, you're getting speed and flexibility and a problem-solving attitude that, dare I say, the more traditional high street banks won't offer you. Bridging lenders are going to give you that personal service, that problem-solving attitude. You may need a deal structured where you have more money coming in day one, but you fund some of the works yourself. So you want maximum for that purchase. There may be a structure where you need, you've got more for the purchase, but you want all of the money for the works in arrears. There's all these different scenarios that you can talk through with a bridging lender, and whether you're coming to us directly or whether you're coming via a broker, we work with you to tailor that financial solution in the best possible way. The agility of bridging lenders can't really be matched. Typically the decision process, especially when I work, you'll be getting indicative terms within 3 hours. You could be getting funds within days. That really allows you to crack on and make the most of that project, and gives you the maximum time on the other end to refinance out of us, whether that be sale of the unit, whether that be a longer term mortgage. So when you're assessing your options, really dig deep into the benefits of the bridging loan, because if used correctly, it is fantastic. Of course, you don't want to be delving into it without having done all of your due diligence on the whole process, because if you take a bridging loan, although the lender will do theirs, and the lender will be comfortable that you can get out of the loan on the back end, you need to have done yours to make sure the whole project itself is viable. But bridging loans on residential property, commercial property, or land of planning are sort of buoyant. Despite all the external influences we can't control, the market is still moving. So when used correctly, I'm sure you can use it to your benefit. Whilst bridging finance offers great opportunities, it's also vitally important to understand all of the details. I've seen numerous scenarios recently where the borrower possibly hasn't done as much due diligence as they could do, or they haven't employed a professional such as a broker or an introducer. They've wasted time by going to the wrong lender. There's lots of great lenders out there, and they all have their own strong suits. But if you are taking a specific type of deal to a lender who maybe is fantastic in development finance but isn't known for speedy bridging, you can really put your whole deal at risk. You need to be assessing what the lender's strong suits are, what fees you're going to incur, and that's probably on the front end, along with, of course, the legal representation that you have and the valuation possibly needed. Maybe it is, maybe it isn't. Alongside that, you need to be fast forwarding to how you see this loan being repaid, what your exit plan is. There has been a lot of issues over the last 12 to 18 months with exits and extensions being asked for, and in extreme cases, repossessions or further enforcement being taken by the lender. Nobody wants that. It does fall on the borrower to take charge of your situation. Of course, the lender can advise accordingly, but you must take the whole thing into account. Just because one lender offers on paper what looks like a great headline rate, I don't know, we're going to give you 0.8 per calendar month and we're going to churn this out over 2 months and no valuation. If the product doesn't fit them, but it gets into their underwriting process and the head of credit doesn't like it, all of a sudden you've wasted 3, 4, 5 weeks maybe, and you're back to square one. So understand your property type, understand what lender best fits that property type. I'm sure you can get advice from a broker if you're not sure, but the one thing being, make sure you've done everything correctly prior to putting the application in, because as we all know, time is money and nobody wants to waste that at the moment. Here's a quick example, a real life example where bridging finance has helped a trusted landlord of mine very recently and close to us in the Midlands. He had agreed in principle to purchase an investment property, but all of a sudden the estate agent and the vendor really started turning up the pressure, really cranking it up on him. He knew the only option was bridging finance. That initial commercial mortgage, that buy-to-let mortgage he was going to get was not going to be anywhere near in the right sort of time frame for the estate agent and the vendor. He came to me, we went out, we did instruct a full valuation because he was after the maximum loan to value. The valuation stacked up nicely. We gave him a 12-month term. Within that term, the plan was to extend and refurb to very high spec. He has done that, and he has now flipped that onto a buy-to-let mortgage. The rental income he's getting is market leading in that area. None of this would have been possible without the bridging finance, because he would have lost the opportunity and therefore not had this great portfolio property on his books. Another clear example of bridging finance at its best. As you've seen, bridging finance can be a very powerful tool for landlords who want to maximise their opportunities and capitalise on potential investments very quickly. As I've hopefully explained quite thoroughly, the speed element can't be matched. The flexibility of bridging lenders is there for all to see. The tailor-made solutions, depending on the type of investment, whether it's residential, commercial or land, the quick application process, the sort of user-friendly and human nature of it from start to finish. There'll always be someone to talk you through and assist you through it. So the bridging finance I expect to continue to be used a lot as the market continues to thrive and pick up. If you need more advice, or you want to be speaking to a seasoned professional, the team at BiG Property Finance have 60 plus years experience in the office. Our phones are always on to discuss opportunities, point you in the right direction, and hopefully help you progress on that property journey. If you like the content BiG Property Finance are providing, please do like and stay tuned for more content from us throughout the year.